Anthony Crudele. How are you? Oh, you're on mute. You're on mute.
What's up, my friend? Long time no talk.
Long time no talk. It's only been like a couple of days, but man, that was a lot of fun doing the podcast with you. But I'm going to bow out here in just 1 second because I also want to introduce the one and only Justine. Justine Underhill, you've been with us for. Would this be your second or third event with us?
It would be my second Trader Summit.
It is so nice to see you again.
It's great to see. I want to invite you to stay around for this conversation. I don't think you need to bow out. Would you stay around?
I will stick around. I'll be more than happy to stick around with
Anthony. Throw in some questions.
Although his hair is way cooler than mine, so I might just put my video off.
Great, no worries. But yeah, please throw in some questions as they come up. I'd love to have you around.
Yeah, no, I'll stick around. But anyway, hey, Justine, thanks for joining us, and I'm glad that I know you're going to be with us for the next couple of days. Conducting a lot of the interviews. She's just a wonderful host, and I know. Anthony, you're going to really enjoy your time with Justine. And like I said, I won't bow out. I'll be here.
Well, thank you so much, Blake. Anthony, it is so great to see you. I want to quickly introduce you. You are the host of Futures Radio Podcast and Develop Your Edge, and a trading veteran, one of the first traders of the E-mini S&P 500. That is truly a badge of honor. I think most interesting, though, is that you're a heart attack survivor. And so I am curious, just to start off, has that affected how you trade in the markets, especially these markets?
The fact that I had a heart attack in my trading screens?
Yeah.
It did for a very short period of time. But since then, I just really built a lifestyle around just being able to, not really think about it. It's one of those things where I think about it every day, of course, but it doesn't really impact me at all anymore in terms of when I'm at my screens. I do have a sense of when I'm starting to get really stressed out, then I will take a quicker break. So it does have that immediate impact of like, listen, man, what are you doing? Step away. And I've actually had that feeling the last week or so as I've been getting roughed up a little bit. But yeah, that's part of the business. But like I said, I would say that's the only thing is that if I start feeling pressure and I recognize it, I walk away a lot quicker.
Yeah, that's where the psychology becomes so important. I am curious though. I mean, you mentioned the past few weeks have been stressful. I think that's been the case for a lot of traders. We've seen a lot of volatility. I am curious because you do focus mostly on technicals, but the macro environment has been so influential in this environment. So how are you incorporating the macros into your technicals?
Well, because it's shifting so much lately for me, I've almost not been following it as closely simply because of the fact that it's carrying too much over to my, opinion during the day, so it's been difficult. There's no doubt. Like I keep a conscious effort of like, I'll watch certain things in the morning just to kind of see what the macro theme is for the day, what data points are coming out. Obviously the Fed right now is an important topic of everything that's happening. So I'm not following it super closely in terms of like, oh, this data should impact that, or I'm not getting too micromanaging it. I'm just aware of the fact of, rates are looking to be increased. How is that impacting the tape? Especially when Fed people are talking. To me, that's the biggest challenge right now, is because when you look at like yesterday, I was trading some Nasdaq, and it's just as like, I see technically that it should be two ways, and then I see what's happening with the statements that they're making, and it's just making that volatility within the ranges so much more difficult. So I'm really trying to stay as much as I can on the edges, if that makes sense. So it's like, if I have resistance or support, my little bit of a wider time frame, I'm really not stepping in until almost way after I see a test. And even that's been tough, so I'm not really stepping in right away at anything because I'm trying to wait to see what it does near the edges. So anything I have within the range, I'm almost not even trading, because I'm just getting stopped out and getting chopped up.
Interesting. And actually, I did want to get into how you specifically handle volatility. I do want to mention for everyone in the audience, please put your questions in the Q&A box, and I will make sure to get to them as we go along. So if there's anything that pops up, make sure to write it down. So Anthony, what ways can traders, so not just you, but traders, handle volatility in today's markets?
Well, the simplest way, the most basic way is just to trade smaller, right? Or to find an instrument, maybe go to options or something. If you like have a bigger picture theme that you want to play and you don't want to go to the futures. I mostly trade futures. I do trade stocks as well, and ETFs. But for me, it's just a matter of being small on the edges, I think is the best way I could describe to trade volatility, because in order for me to build into a position, I have to build into a position in a much smaller incremental way now. Like adding to something that's working right away or adding to something that's breaking out that you have a winner on is not working. So if I want to build into a bigger position, I have to be really small and just slowly build into it. And my time frame is intraday to multi-day, so it's not really too wide of a time frame. But even for me to build a position intraday or into maybe a day or two, it's taking me a lot longer. You can't be super aggressive in one spot, and you can't be aggressive on an ad. I mean, that's where I got myself into trouble a couple of times, even yesterday, and I'm still doing it. And subconsciously, I know not to do it. Something's going my way. It's breaking out. Momentum's just turning on a dime. So that's where I got caught again, adding to a winning trade, adding to it, press it, because that's my style, rotate off. So to handle the volatility, you got to stay small on the edges. And if you want to build into a bigger position, you have to, a price you never think you're going to get, you might get.
Do you see this volatility as temporary? Or do you see this, as something that's considered maybe part of a bubble that will eventually burst?
Well, I'll look at it from the Nasdaq's perspective. So I think the Nasdaq is going to be really volatile for at least the next couple of months. I don't see it stopping. I really don't. The only way I see volatility stopping is if we take out that recent high and we just get back in the grind higher mode. I mean, it could happen, but I think the only way that volatility stops is if we make a higher high than where we were. And I think that will slow down volatility and we get it back into bull mode. I think right now we're in a two-way tape, so I don't really see how volatility stops inside of what I think is a pretty decent range. I mean, for my technical stuff, I think the Nasdaq's could be in a 2,000 point volatile range to where we stay within the low and the high, and just really just make everybody so frustrated of not knowing what primary trend is. But if we take out the highs of recent highs, I think it would temper it. I think it would slow down.
Hey, Justine, do you mind if I jump in here real quick?
Sure.
All right. So, Anthony, it's so funny that you and we actually just had this conversation, not this specific conversation, but conversation about volatility just a couple of days ago on your podcast. And I want to ask you this, and how much, you're talking about volatility, dealing with it, the stresses it can bring, and, some of the how should I say, the ways you can tackle it, just as you said, the most easiest way is just reducing your position size. And I always have a good rule of thumb that I've followed. And I kind of wanted to get your take on this. Because people ask, well, what does that mean for me? It's not necessary, because you and I are different, right? I mean, you may trade a $1 million book and I'm trading a $10,000 book, or I'm trading $1 million book and you got a $100,000 book. We're gonna view sizing a little bit differently, obviously, as traders. But I always go back to well, if I'm losing sleep overnight in my positions, that means that the sizes are really too big. Do you follow any type of rule like that?
Well, I can tell if I'm in something that's too big. I mean, honestly, I'll talk about even today. I think I got too big a little bit today. I got really kind of aggressive long Nasdaq after the lows, and I started pressing them. I pressed a little bit as we started to rally, and then I looked at my position and I'm like, man, if this thing doesn't start going my way pretty much right now, I'm probably gonna have to click out of half of it. And so mentally, I was at a point where it was like, once it got through something a little bit, I clicked out of half of it, and then all of a sudden it just popped. And I'm like, so I knew at that time, it's not that it's not that I felt pain or pressure, but I was just looking at it going, I just really need to be right now. And just a little bit of movement ticked me out. So I wouldn't say for me, it's losing sleep or anything. I never really go home with anything too big anymore, because I don't want that to be an aspect of my life anymore. So anything I go home with, I'm usually pretty good about just being comfortable with it. But intraday, if I know I'm getting too big, if all of a sudden I'm looking at it going, man, I just added here, I got to be right now, and I'm feeling kind of like I'm getting ready to click, then I know I'm already too big. And if it starts to go my way, I'll scale out right away anyway. But yeah, I mean, we all know what's right and wrong. I think that's what it comes down to. It's just a question of what do we do when we're in that moment and that pressure, right? I mean, I don't think any trader doesn't know when they're trading too big. They know right away. You can feel it. I mean, I know I do.
Yeah, and you know, those are really true words from a veteran trader, and I think everybody needs to hear it. And also somebody who's been doing this for a long time, you know, it's so smart. Like, I can take home positions at night, but I've gotten to a point where I know where the size is that I'm comfortable with, and because you don't want it to rule your life, don't you? I mean, it weighs on you physically, mentally. I mean, these are the markets that can really tear you down. I don't know if you agree with that or not.
Yeah, I mean, look we're addicted to this, right? I mean, this is what we're addicted to, this phone, right? It's just the reality. So the more things that keep me attached to watching it, like, you know, I'll play cards, or, you know, during the week, I'll go out to dinner. If I'm constantly watching it, I already know that I need to trim that position. You know, that was a big thing for me in crypto. I'm like, man, I'm trading this thing all the time. It's driving me crazy. I got to get off this, you know, freaking phone. So I had to start thinking about how I was positioning myself in it. And you have to build a strategy around that. I think that that's also a part of it. I know that, you know, you and I have been doing this a while, and we know ourselves enough to where we have great self-awareness, and our strategies will fit our personalities. I think that it's important for people to recognize that you have to build a strategy around your lifestyle. It doesn't work the opposite. Like, you don't just say, this is the strategy you need to do, I'm going to live around that lifestyle. My lifestyle is going to be based around that. That won't work, because eventually you'll veer off it. So I know how I want to live, and I know how I want to feel. So if I'm not executing within the realms of me being comfortable, I'm in trouble, you know, because I'm going to veer off it.
Well, I think there's some really wise words. I don't know if you guys hear that rustling around in the background. I'm not sure where that's coming from, but hopefully
I hear like a ticking.
Yeah, like a little bit of
sounds like someone's putting up shelves.
Right, that was it. And I don't see anything going up around here anyway. But thanks for answering those questions, or actually talking about this, because it's important during this current environment, as Justine, you know, you just pointed out. I mean, it's let's say we're in a volatility bubble. I mean, is it going to get worse? You know, volatility is just kind of perched up at these levels, and it's not abating. So that means, you know, what does not go down probably has a little bit higher to go, meaning volatility. So we got to we have to adhere to what we're doing, and what the market's doing, and what the market's telling us. And so this way we can adapt to it. So great. Thank you for answering that. Christine, Justine, I'll let you continue on.
Yeah, I am curious. I mean, just following up on that thread, you know, if you do have a position and it is a losing position, what do you do in that case? How do you deal with it psychologically? And then, you know, you don't want to back out of something if, you know, it could potentially turn around. So how do you know when to call it quits?
Well, for me, look at you just, if it's not working, if I see the trade is just not working, like especially lately, I think the environments are going to be a little bit different. Like right now, because I think it's a two-way trade, and I'll just keep kind of leaning them on Nasdaq and even Crudele. Those are the two markets I'm trading a lot. You just got to get flat, man, because you can get right back in. I'd rather just be flat for even 30 seconds and pay up or down for, if I'm looking to get short, to get right back in, because the opportunity isn't gone by getting flat at that moment. I think that people think, oh, because I get flat, the trade is over. And no, it doesn't. You can get right back in. Now, the question is, when you get flat and you look at it, does it make sense to get right back in? You know, I did it a couple of times today. I mean, I've done it lately where it's like, look, I'll give you a perfect example. Okay. I was long. Well, now let's talk about a trade that was working that I clicked out of some of it because it was so near an area that I felt like if it goes through here, it can blow through it. If it doesn't, it's going to come right back. So I just took half the position off, not because that area was an area that I thought was an area I should be getting out. I got out because I looked at it and I said, look, if it gets through here, I'll just get right back in. But if it starts to come back down, do I want to deal with waiting for it to eventually push through that area. And thank God I did it this morning in the Nasdaq. That's what really saved my day. I still lost money today, but I bought the Nasdaq. I rallied up near the highs. I covered half. It came back down to where I initially bought it. I bought more. It ended up, I got out right before I got on with you guys. I puked them and I was like, well, thank God I did that, because if I didn't cover half up at the top, I would have just really gotten rocked. So it goes against me. It's the same thinking. I just got to get flat. I mean, I don't know why people hold on to something too tight. You don't need to. Relax the grip a little bit. See what you feel like 30 seconds after you're flat.
Yeah. Now we do have a question coming in from the audience. Is wondering if you trade via your phone ever, and are you more of a scalp trader or a swing trader?
Do I trade on my phone? Oh yeah, of course I do. I mean, I don't. In this day and age, I embrace the technology. I use it. I'll move stops. I mean, I wouldn't say that I'm doing a lot from my phone in terms of initiation, but I will manage a lot of trades from my phone. After I walk away, I'll check it. What's it doing? And all of a sudden I'll look at it and be like, I should maybe take some off here. Or like it gets within a few ticks of an area where I know I want to get out and it didn't fill me. Maybe I'll just say, close out the position. So I definitely do use the phone. Justine, I forget what was the other question though.
Scalp versus swing trading.
I don't scalp anymore. Yeah, I don't scalp anymore. I mean, it just moves too much. And I go back to like my lifestyle. I don't need that kind of aggravation in my life trying to make a couple of ticks every day. It's just, I'm not built for it anymore. And it's funny, that's where I made a majority of the money in my career was scalping. And that's who I was for a long period of time. But I just find that for me, there will be markets I will scalp in that I think are great. I think during COVID, I did a lot of scalping at the beginning. I did a lot of scalping really kind of at the beginning of this year for a few weeks. Once I start getting chopped up with it, I just pull the plug quick. I mean, I just keep going back to it. I'm not in this business to force things that aren't working for me anymore, right? I'm here to make money. If it's not, and reality is it's not that I think I could make money scalping throughout the year, but I look at it like this, is that what the pain and the pressure, and I think I would be up and down a lot more versus the way I'm doing it now is I wait for areas I really like and I just kind of step on the gas when areas I like.
I'd like to talk about areas that you like. You mentioned the Nasdaq. Could you talk a little bit about what it is you're watching for in the Nasdaq, what indicators you're looking at, et cetera?
So a couple of things I'm looking at right now. First of all, I like to look at Bollinger Bands, 20 period, 3 standard deviation. If you pull it up on a daily, when the market is going up, like when it was going up, you saw the market going up and you saw the mouth of the Bollinger Band open. So when the mouth of the Bollinger Band is open, to me, it tells me that volatility is expanding. We can keep going in that one direction. Once the mouth starts to close, and I see that, to me, the market gets boxed in. To me, I said, and it indicates mean reversion. It did that maybe a couple of days after the high was made as of late. And then I also looked at the 200-day moving average. Now, I'm not someone who trades off the 200-day moving average. It's not what I do, but I use it because everybody else looks at it. And if everybody sees we're failing or crossing the 200-day, that could indicate, more direction in the way that I think or not. So I'm aware of it. And I saw that we failed from it. So to me, the 200-day moving average, they've tried to close above it multiple times. And I know it's the most lamest indicator. Everyone talks about it, but I look at it for just basic sentiment of the market. We came off it with the Bollinger Bands coming in. And something that I do look at that I think is extremely important is I look at the opening year anchored VWAP to where we are now, because that really is a guide for me to say, what is the volume weighted average price doing? And then I also anchored one to the low. And that was part of my thinking as to why I've been buying the dip really yesterday and a little bit today, even though we've been a little bit below them. If you look at the futures, it's like right around 14,550-ish. And I like it when we violate it a little bit. Now, so I've been trying to see if I get a daily setup, which I'll watch opening range and stuff, and I'll see what we're doing. And then I'll anchor a VWAP to the low into the open. So I take that same type of thinking that I have on the daily, and I take that into a shorter time frame. So I'm using a 3-minute chart, anchor the VWAP from the open after I watch it for a little bit. And then after I think it makes a significant low and comes off, I'd anchor it to that. And that's what I bought off of today, was that VWAP off the low. And then I waited to see if we go up and maybe fill the gap and stuff like that. But I don't really have any big areas to look at for support right here. That's why I think we're in a two-way trade. When I look at the chart, even through my indicators, it's like, I just don't have anything of significance. So I'm really going into intraday trading and just using anchored VWAPs and just some Bollinger Band strategies to execute.
Interesting. Are you using this? I mean, you're using it on the Nasdaq. Are you using that on other markets as well? Just the Bollinger Bands, the anchored VWAP? Like, does that apply across markets?
I definitely use it across the markets. I really like it for the S&P and Nasdaq the most. You know, with crude oil, you know, crude oil has been so volatile lately that I am looking at that, but I just it's having, as of late, it has less significance. I've noticed that it's just blowing through some of these areas. You know, I mean, when you get into commodities, when you get into something that has true fundamentals behind it, and some will argue that stocks do too. I don't know about that, but I think when you get into commodities and you have different headlines and different fundamentals taking an impact on a market, I find that that indicator sometimes will work less when you have this much headlines like you do with crude oil. Those are the only markets I'm really trading right now. I'll use them for crypto as well, but I also feel like crypto is the same way. It just crypto just all of a sudden it'll just blow through it, and you're just like, wow. So it's not as consistent, I would say, as I see it with the indexes.
Interesting. Yeah, if you want
Can
a
I ask a
volatile
question
market.
here? Just
Sure, go for it.
Yeah, I popped in here because I like, oh, this is perfect. First of all, there's a question that came in from a viewer that I happen to know pretty well that I wanted to ask you. But before I ask that question, I wanted to say, you know, how often do you switch products? I mean, are you always trading what's moving, or do you really like cling on to a certain, like, you know, I love trading crude. I just keep trading crude, and even if crude's not moving, I'm still finding myself trading it. Or do you, at what point do you go, you know, I really need to, you know, shift gears? Do you do that quite a bit?
It all comes down to the daily chart. So it sets up there for me. So right now, well, I'll backtrack a little bit. Nasdaq made the low of the year. I saw that we basically went down there and double bottomed. I remember texting my one buddy and I said, I think it made a good low. I bought some calls. I was trading futures. I was long. I caught the move pretty good. You know, it was going into like that Fed day, I believe. And then I covered it. And then I just watched it rally like another 1,500 points. And I was just like, okay. I just watched the whole thing because after my move off the daily was done, I'm like, I can't get short here. And I really can't be long now. So I'm stuck. So I just moved away from it. And then I started getting really actively trading oil, which I was throughout that time as well. But oil, I was really bullish. I caught a huge part of that oil rally. And then when it came back down, I bought it again. And then when it started to go back up, I added and I got really aggressive and I just got absolutely lit up. And that was really where I was like, I had to take a few days off after that because I gave back just a huge amount of my gains, you know, that were really hard to get. And so I got crushed. And then I looked at the chart and I said, I can't trade this now. Then the Nasdaq set up with what I said, the year to date VWAP, and it set up off the low VWAP. It finally came back down and I've been waiting to buy it. It's funny, you can't wait for it to happen. You finally get it. And I'm losing money on that right now. But you know, but to me, yeah, it sets up on the daily. If I start to see it regain it again, I'll step back in again. But like right now, I just keep seeing it trying to get above it and it's just fading. And I'm like, okay, you know,
That's a good answer to the question, that you use the daily charts really to judge, you know, what products you should be, you know, focused on.
Well, my mindset is this: I only need to know the direction I want to trade in a single market. If I know I want to be long crude, or if I know I want to be long Nasdaq, I just, once I have that trigger on the daily, I don't even need to look at it. I just go in and I just trade it long every which way I can. And then once it stops working, I stop. If it keeps working, I keep pressing. I mean, I never claimed to be the smartest guy in the room, you know, but I've made money just by literally saying, you need to be long, just keep buying it. And when it's working, press it, you know?
All right. Well, hey, Justine, there's a question. I'm gonna address this one from Jason really quick, because I think it's such a good one. He said, I know you're a trading veteran, but for newer traders, can you share how long it took for you to make the turn to being profitable? And did you ever consider giving up when things were difficult?
Oh man, I consider giving up, you know, still.
You're like,
not in the sense of like, yeah, where I'm like, yeah, look, everybody's going to be different. It took me 3 years to make back the money I lost in the first year and a half. So it was a year and a half of losing, a year and a half of basically breaking even. And after that third year, I started to make back that money and I was in debt. And all sorts of crap. So
That's interesting. I've never heard you say that as often as I've listened to you. And that's actually, my timeline is very close to that. It's like 2.5 years roughly.
Yeah.
So, and that's interesting, but this is, we've been doing this for a long time. You didn't have the tools and I didn't have the tools that were available now back then, right? I mean, it's a different
no
time.
doubt. And everything was more expensive then too. I mean, everything, I had so much more expense. Nowadays you could trade for nothing. I mean, the commissions are so much cheaper. You look at, I mean, if you trade stocks, there's no commissions. If you look at, just the tools. I mean, I used to have to pay for, I think my CQG bill was like $1,400 a month. Plus I had a seat lease. I had all these expenses. So that has totally changed. I think that the retail trader now has a much better chance of becoming profitable in a much shorter period of time. But that comes down to that trader's mindset. If they come in trying to make money right away, or if they come in without putting the time in, well, then the curve is going to be long for them no matter what. But if they come in with a mindset and they're working and they're doing things that they don't need to take money out of their account, I think that it's going to be a lot quicker for them.
And as you're pointing out, it's really the will to learn. And I know a lot of driven people in trading communities, ours and other trading communities, that are just, they're willing to put in the time, effort, and energy. And it really does take that. I don't think there's a oh my God, I can make money every day type of thing. That you gotta go through the learning curve. And I think your goal, especially with your podcast that's so popular and you've been doing it for so many years, which I applaud you and your Futures podcast. I love it. By the way, it's one of the very few that I'm actually subscribed to. Just so you know, it's great. But the thing is I think a lot of people don't realize that you do have to put in a lot of effort and a lot of energy to make it work. And it's not an overnight type of flick a switch type of thing. So,
and even when you do figure out something that makes you money for a period of time, it's just not going to work forever. It's a constant, you have to be addicted to it. We always joke, a lot of my trader friends that I talk with a lot, we're junkies, but I think you have to be, you have to be in the sense of, because even when things aren't working for me, I have to find a way to work through it. I have to find a way to work it out. What's not working for me? I always say, is it me? Is it the market? Is it the environment? Right now I look at it as two things. Or is it me? Is it my strategy? Or is it the market environment? And right now my strategy is fine. It's me and it's the market environment. I know that I'm too aggressive in bad spots, and the market environment is telling me not to be aggressive in these spots, but I'm still doing it. And it's I know not to do it, but I've still done it. And it's not that I can't be making money right now because of my locations. It's just that I'm doing stupid things, or I'm getting aggressive coming off of a loss. And I even said, when I took time off, it's I'm trying to fight back in it. And it's even though I don't feel like I'm looking for home runs, I get something that's really good. And I'm this one's going to be next thing I'm
been waiting for this one.
Smack out of it. So, but at least I'm getting out of the losers. And that's something that, but that's the frustrating part about it. It's just I'm not losing a lot right now, but I feel like I'm just getting crushed because it's it's going my way and then I'm just covering. So
would you consider doing automated strategies
Justine,
here?
go ahead.
Oh, I was curious about, we did have a question about automated strategies. Is that something you could do to overcome the psychological aspect of it?
Yeah, I think it's a great idea. I think that is I've done them. Personally, I feel that I do better than the automation. But I do believe that the automation is better for most traders. If you can find a way to automate your strategy, I think it's better. I mean, I'm a discretionary trader at heart. I like it. I love it. So the way that I approach my business and the way I do it is I like to have control. Do I definitely think that automated strategies would help me? Sure, I do. Of course I do. But the way that my strategy is built, it's built by me being the executor of it. It's built by me taking the most out of it. I think you have to look at a strategy and say, is this strategy really good? My strategy on its own is probably barely a winner. It's maybe it would make money through the year. But I look at what I do and I make a lot more. It comes down to my execution of it. So I know that when things are really going well in bull or bear markets and whatever thing you're looking at, like that crude oil trade, when I initially made that money, I would have never made that much on an automation. I would have never given that much back either. But that's what you deal with. So who do you want to be? I think you have to have that identity.
Mhm. For people that are just starting out, this is one of the questions we have, what would be your best advice for people just getting into this? And piggybacking that onto another question, where do you start when you're just starting out? What do you read? What podcasts? What do you watch?
I think you need to find somebody that resonates with you. I think that this business is very personal. So I think, I didn't read a lot of books. That doesn't mean you shouldn't. I don't know that books are going to give you they'll give you some of the tools to build a strategy, but I still think that the strategy comes from within. Like, you have to build a strategy around your personality. You also have to find markets that fit your personality. I mean, a lot of people go and trade certain markets because they think that's the market they should be trading. Well, why? I mean, I don't understand that. They say, well, I'm going to go and I really do not resonate well with gold. That market is always difficult for me. So I don't really trade it that much anymore. I mean, I'll trade it every now and then and I'll trade it intraday, but I know exactly where I'm at with it. I get more aggressive with Nasdaq and Crudele. I just feel a rhythm with them. And so for me, I like it. So I built my strategy around the time frame I want and the style I want to be within that market. I mean, that's the key, I think, if you're new, is that you have to find the time that you're going to be trading. When are you going to be trading? Like, if you're telling me you want to trade interest rates and you're going to be trading them in the middle of the day or the close, you're just going to get chopped up. I mean, what markets are you going to trade and when? And then you look at the way that market is. I mean, I even use like the treasury to crude oil example. They're very different in the way they move. My Bollinger Band strategy and VWAPs do not work very well in treasuries. I mean, it's just not, it doesn't resonate over there. So you have to find a strategy that works for that. And my advice to them would be, look, you have time, find one indicator you really like. Find one look within that indicator you really like. Don't be redundant with your indicators. You don't need multiple momentum, multiple indicators that are redundant, right? Make sure you limit that. I think that too many people put too many indicators on there, and find one look you like, and that one look that you trade really well in a market that you're familiar with the price action in. That to me is the premise of where you start to build your strategy around. For me, it was the S&P. Once I was able to build a strategy there and I found out how I liked it, how I liked to trade, and how it resonated with me, just the way it moved, understanding the ranges, how it reacted in news, all these different nuances. Then I was able to start building some things within and build a strategy.
Are you just watching the markets for a while before were you before getting into them, or did you immediately jump in? And to that, did you do any back testing to see if your strategy worked historically, or is it not even necessarily worth
Well, I
going
watched
down
the
that
market
rabbit
for
hole?
years. Yeah, that's a great question. I watched the market for years because I was in the S&P 500 pit. So for me, I was already there. That's where I started. Even though I started trading electronically, it was because I was losing in the pit. But I think you have to watch the market for a while before you start to trade it, because it's a different language. It's a different language. If you think that that's something you could just step into, I just don't believe in that. I mean, it's the access is there, but the understanding of what people are talking about, that takes a lot of time. And there's just so much out there. There's so many things happening, and just understanding the basic techniques of what a limit is, what a stop limit is, what a stop market is, just the basics of execution. You have to know that stuff and understand it and be clear on how you're doing it. So it's like, knowing how to use a knife before you learn how to cook. You have to learn knifing skills before you start building recipes. I mean, you can't just go in there. I like to cook, I'm looking at my kitchen and I'm thinking to myself, I had to learn the basic skills of that. So this way, when I went to prepare everything, I was fundamentally sound. So I think you do have to watch it for a while. I don't know if you asked me something else. I can't remember exactly what it was.
I was just wondering, do you do back testing on your strategies?
That's what it was. At the time I didn't. And I will say this, I back tested my strategy now to know enough about it that I know that the probability is in my favor in what I'm looking at. That doesn't mean I'm going to make money, right? So I think that's the other thing. If I found a strategy that the probability is my favor, I've traded strategies. I mean, I've bought strategies over the years. I mean, all the different things I've done. And it's like all these high probability things. I still lost money. What does that mean? I mean, it comes down to the confidence that I have in executing it. And it comes down to, my good friend Ira Harris will say, context and nuance. I mean, you have to understand. It's like me, all of a sudden, I keep going back to taking crude oil. I'm going to start taking short signals in crude oil when it's crossing 100, and I think it can go to 150 because I got a sell signal on my chart. I know not to take that trade. I don't care if it works. I don't want it. I think you have to understand what's going on there. I think you have to, the context and nuance of the market. This is not just about finding a strategy. It's about becoming a trader.
How do you change your strategy depending whether it's a bull market versus a bear market? How does that completely change what you do?
Well, I think for equities, it's pretty simple. And Boris said it great. I mean, I almost am only a long trader now in Nasdaq. I very rarely traded short. And I very rarely traded short, even as a futures and options trader, because it rallies so many more days a year, and it rallies so many more. The stock market is not meant to go down. I mean, it just isn't. So why am I going against the grain, we'll call it? Why am I going against that? So I actually prefer being long, because I also think it gives me the ability to hold something longer. With shorts, I am much tighter with my stops, because it either works and it's a lot of momentum, or I'm out. Especially when it comes to the Nasdaq. And he talked about how the biggest bounces happen in bear markets. Well, why would you ever want to trade short then? I mean, it's the same thinking. I just keep going back to it and go, everybody keeps saying how bearish they are and they want to be bearish the stock market. It is such a difficult trade. And I made a lot of money in 08. It was the best trading year ever. I smoked them short. It was great for me. Those years are so few and far between. I had a person next to me that I paid to tell me what Bloomberg was saying all day long. Oh, this thing was coming out, SPI ratings. I just, boom, I'd smash the bid. That is not the case. I don't see right now. I mean, maybe it will start to happen as Fed's raising rates and things could happen. Don't get me wrong. But it's a time, very rare time, where a bear market takes me to a place where I'm super aggressive all the time. It's just a very rare moment.
And I wanted to expand on that really quick, Anthony. I mean, the markets, especially equity markets, by design, they're designed to be bullish instruments. I mean, over time they are. You have constant money flow that's coming into them, and yeah, I think we'd have periods of range bound activity, which we might be seeing right now. But more times than not, as you're pointing out, it's easier to be on the long side than the short side.
Yeah, I mean, we laugh about buy the dip and people talk about it, but are there more people looking to buy the dip at an area of technicals, or more people looking to sell a rally at an area of technicals? I mean, the number of bodies itself makes sense for you to more likely look for longs, which is, to me, it's common sense. It doesn't always work. Like right now, I think a lot of bad habits were built last year where it worked really well. All my stock trader friends killed it, and now they're struggling. Well, yeah, but this is where, like, as the trader comes in, what's the environment? I know Nasdaq's a two-way trade. That's why I said even today, the minute it did not hold that area that I was long the Nasdaq, I got out. It's in a bull market, I might hold it a little bit. I might trim some, wait to see it regain it. The minute it failed to hold it, I got out. The minute it failed to make a new high, I got out, because this environment told me to.
Now, we do have a question that came in, and I'm curious as to what you think of this. Among these three topics, risk and money management, entry, exits, psychology, what do you put as the highest priority? And do you have any examples of trades where you've done that?
Well, risk and money management is the only priority. I mean, psychology only matters after you've built a strategy. I talk a lot about trading psychology, and I know a lot of people will say Anthony talks a ton about it, because that's where I'm at in my career. I lose money, I talk about it, and I just click out. That's it. I get over it. It's part of the business. It's just second nature to me. Just cover the loser. I mean, it's over. So my risk management skills are pretty tight. Trading psychology comes in for me as like recovery. What are you doing in the certain moments? Why did you press there? Go back and thinking about stuff like that. So trading psychology to me matters after you've built something. I don't think a new trader really needs to worry too much about it. I mean, it is you are going to be going through a journey. So it does matter. And I'm not saying trading psychology doesn't matter on the onset, but you don't know, I would say you don't know enough to know where you really are with trading psychology. I think that there's a little bit amount of it. And I think like Denise Scholl will be a great resource for this to talk about it, or Jared Tendler. I just think that as a new trader, there's too much going on. I don't even think you should be looking at fundamentals. I think it's just not there yet. You're not ready yet. I think you should just be looking at risk management strategy. Find one look you like in one market that you can trade well, and you can make more money on it eventually than the automation. If you can do that, then you understand a lot more than you think you do, because you understand environment, you understanding position sizing, you understanding when to get in more, when to cover better, certain things like that. Those skills need to be built, I think, first.
Interesting. Do you ever trade long-term options, something like a 4 to 5 month expiration?
No, I don't.
No,
Never.
you don't even touch that.
I don't. I can't.
No, that's
I can't. It's just my brain doesn't work in thinking that long. It just I look at, if I look at the Nasdaq chart right now, my visual is I see what's coming the next few days. That's the way I operate. So when I look at it visually, I see how I think the pattern will play out. I can't see that long.
interesting. What about would you say to create an edge in one certain asset area, or look at a bunch of, can you make a niche in trading equities, or is it really you need to focus on the Nasdaq or the S&P, or can you do it all?
Oh, I think you could do it all. I just think, one of my good friends, he just mostly just trades Apple. Apple is basically like an index. If you really look at it, I trade it quite often myself. It trades like an index, and you understand how it trades during news. You understand how it will potentially trade during earnings. You don't know exactly, but you see the movements of it. You understand it. It's about understanding the range. It's about understanding the movements when data points come out. It's about understanding, what is Apple doing during a day where the Nasdaq's getting crushed? How is it relating to the Nasdaq? Right? What do you do in a day where Apple's really getting beat up and the Nasdaq's up a lot, or the S&P? How do you handle that divergence? So it's about studying all of the things around whatever asset you're trading. I keep going back to it. You have to find one market, one indicator or two indicators, and one style and one strategy that you look at and you say, I can trade this, and I see it and I know how to execute it, and you become really good at it.
Once you have that strategy, what does it take, or what do you need to realize that you actually have to pivot? What would make you change your mind? Is it that you keep having losing trades and that, I need to pivot, or how do you reassess your strategy as you go along?
So there's there's one way I would look at it. It would be this: first, that one look that you like, automate it. And I don't mean automate it to have it go trade. I mean, automate it to where you can see the results. So like I have my trade station in front of me right now. If I put in my favorite look and I just program it, and you could do this with NinjaTrader and a lot of other ones I have. You just program that look. See how that look trades. I could go back and pull 90 days of data and say, okay, this trade made $1,000. How did you trade it? Did you make 5,000? Did you lose 2,500? Where are you? So I think you need to do that in order to see how that one look is. Create a very basic, systematic approach. This will remove a lot of the noise for you. This way you can mark yourself against something. When I started to do that, I was like, okay, man, this is you. You stink right now. Or look at, man, you're doing really good, and your strategy is barely making money. And you recognize like what was going on. Well, you saw it, and that you got to mark yourself against something. That's how I do it.
Yeah. I think having a clear strategy, knowing what you're going for, being able to be focused and not getting distracted by whatever other noise is going on seems to be the key key to this.
I wanted to ask you, Anthony, when you're trading, like I have like the strategy that works for me, right? Like I know when I'm messing up in the markets, I know when I'm losing and I'm consistently losing, and I know when I'm like not pulling the trick. I know also what my bread and butter is, and that I need to go back to. And sometimes that has to happen in my trading career over the years. I've actually had to pull out the trading journal and say, okay, I follow this, and then, usually I get positive results if I follow this, and then I go back to it. And it's funny how I have to do that. And I have to, like, it's kind of like I'm driving, but I'm kind of falling asleep, and I've, swerved off the road a little bit, and I've got to correct. Do you ever find yourself doing that in the markets as a trader?
Oh yeah, I mean, of course. You look at it and you're always questioning this. I don't know how you can. I don't know how anyone with a straight face can say to me that, they figured out something that just works all the time. They're just so confident with it and they don't want to change paths. It's impossible. I mean, I don't know, maybe it's just me. I don't know. Maybe I'm just not smart enough to find something like that. It's too
You're not the only one.
difficult. I'm questioning myself all the time. And I do that because it keeps me sharp. Because if I'm not doing it, then where am I? And I look at it like this, going back to the leaning on that one look. You and I have done that. If you showed me your strategy tomorrow and I showed you mine, you and I can make money trading each other's strategies. I'm pretty confident of that, because once I would understand it, I would look at it and say, okay, I understand what he's looking at here. I go back to it. I only need to know one thing. Do I want to be long? Do I want to be short? Or is it a no trade? I don't need more than that. I think everybody looks at for triggers, entries, divergence. I mean, okay, I want to be long. If I want to be long, I'm going to find a way to get in good, and I'm going to try to find a way to ride it as much as I can. That is my thinking.
That's wonderful. Thank you so much for all the advice, Blake. I think we're at time. Is that correct? We have to wrap this up.
That is it. And
Okay.
this conversation could go on for hours with Anthony. I love speaking trader talk with him. So
Same.
Yeah.
well,
Thank you guys so much. I don't know what to say.
Yeah, well, I was gonna say, man, to you, Justine. No, but anyway, hey, Anthony, I want to say, it is always a pleasure. It's always a pleasure to talk to you, and really, I had so much fun on your podcast earlier this week, and Justine's here and asking all the right questions. Thank you, Justine, for really being here as well with Anthony. And Anthony, how if I'm, I had already had somebody ask, and I answered them for you, but you're a veteran trader. You've had ups, you've had downs. I really like your honesty in the market, and really getting to the root of it all. How do I find out more about you as a trader?
You can go to anthonycrudele.com. Everything's there. Everything's free. My podcast is every Wednesday. Maybe I take a Wednesday or two off here and there, but pretty much every Wednesday it's live at 12 Eastern on YouTube. You also can find it on iTunes and everywhere. All that will show you on my website at anthonycrudele.com. And then I do every Sunday I put out a video for Develop Your Edge, and I always talk about how I can get better at developing my edge. That's where that whole idea came from. Is just like, look at a lot of what we talked about today. What am I working on? What am I seeing? Every week I sit down and I think about, what am I seeing in the market? What can I do to get better? What am I doing to develop my edge and get better? Because there is no just one edge you will find. It's about constantly working at it. And so there's 2 videos I put out a week. Like I said, they're free. And of course, Twitter, Anthony Crudele, and that's it.
All right. Well, thank you so much for being here. And Justine, do you have any last words that you wanted to give to Anthony?
I just want to thank you for all the psychological advice and, being clear with your strategy. I think a lot of times people kind of get overwhelmed when they start out. And so, thank you for your clear, straightforward advice in that realm.
Thank you so much. Great questions. I really appreciate you guys inviting me. Cheers, everybody. See you. Have a great weekend.
Thanks.
Thank you so much.